Hey there traders, this is Steve Miley, the market chartist for FX Explained, and here we're going to take a look at a couple of the major global equity markets. The S&P 500, we look at the E-mini future, so the E-mini future on the S&P 500. The S&P 500, obviously the benchmark average for the US, but I'm also going to take a look in the second half of this video at the FTSE 100, the UK benchmark average. Now these markets are starting to shift more aggressively to a risk-off theme in here. I think there's real risk for a even more aggressive plunge lower across global equity markets, particularly if these US equity averages, which are just about holding in, shift to more negative in here. And the more negative shift is being caused by continued spiking of COVID-19 cases across Europe, which is bringing with it more severe lockdown measures across Europe, and obviously therefore damaging the regional economy. We've also seen now worryingly rising levels of COVID-19 and hospitalizations in the United States, and also fading hopes of a US economic relief package ahead of the US election. So all of those things in here combining for a more negative theme for global markets and national markets in here and national economies, and so we're seeing the equity averages certainly looking more vulnerable. So S&P 500, as you can see here, we've plunged down early this week down through this trend line support. The market has been trying to hold in, having breached this trend line that goes back to the end of September, but then yesterday in here falling back lower in here, taking out these supports in here, 34.10 and 3/4, 34.03 and a half, down through those overnight in here, with increasing concerns around all of those factors that I've mentioned there, and then so markets certainly shifting to more risk off, and that really opens up vulnerability for a deeper setback to start to undo a lot of the positivity. And remember, a lot of this September-October rally was based upon expectations of a coronavirus relief bill and measures from the US. So it looks like that may not be happening, and so markets rolling back lower. If this market starts to see a more significant breakdown, if we start getting below the next support in here, 33.65 and a quarter, start breaking down through there, then it looks a lot more vulnerable to a more aggressive sell. Now European averages, I'm just going to dip to the DAX actually before I go to the FTSE 100, and you can see the DAX in here selling off throughout this week, taking out lows in here from earlier in October, 12.58 1.5, 12.521 in here from early October, and this is looking far more vulnerable. This is looking more like a head and shoulders topping pattern. If we break down through this neckline, if we start to take out 12.316 and 12.199 and a half, it looks super vulnerable in here. But going to the FTSE 100 now, is going to take a quick look at that, and a super amount of vulnerability in here. So the FTSE 100 has been in a kind of a gradual downtrend all the way from June in here, this erratic downtrend, more in a sideways theme in here through September, October, kind of caught between really 57.50 and like 61.50 in here through the whole of September, October, but breaking down in here last week, sideways the beginning this week, and a really aggressive breakdown yesterday, both with this roll lower regarding all the factors that I mentioned there, but also in here for the FTSE we've had a pound strength come back through, which doesn't help the FTSE. Pound strength is seen as negative for the FTSE, and so that pound strength in here coming from the EU-UK trade talks resuming, alongside the fact that a less dovish tone from the Bank of England saw the pound spike higher yesterday, and that's allowed and encouraged the FTSE to break lower, breaking down through these lows in here from September and October, and that leaves the FTSE even more vulnerable. So European equities particularly vulnerable, the UK average in here really vulnerable in here to further downside, and the S&P 500, as we've shown back there, really getting to the point now where if this starts to go lower in here, the S&P 500 is going to be critical now. If this starts to really accelerate to the downside, and I do see real threat for that, we could see far more aggressive sell-offs in those European and UK equity stock indexes. Okay, I'm going to leave it there, guys. I'm going to wish you all a great trading day. Please do stay safe out there. I'll be back with you with another report on tomorrow, and until then, please do stay safe and take care.